Alright, what is up traders? Hope everybody's doing well. Today is going to be a little bit of a different video. Today is going to be more of a educational video. It's going to be about kind of something that I noticed happened during one of the trading sessions, I think last week or the week before, 27th of July. This was before we took out all-time highs on NASDAQ. So the video is going to be about how to filter out fake A plus setups, or at least A plus setups that, per my system that I've shared on YouTube, are fake or just not real A plus setups. So the example that we have today is, if you don't know my model, so my model is basically, I wait for macro to kind of simplify it real quick. I wait for macro, and then I look for a higher time frame draw, and then a lower time frame due to swing, right, or a fake out. That could be in a sort of an SMT maybe, or a short-term liquidity sweep, and then after that a breakout structure with an impulse to the upside, and then target that, or to the downside depending on the direction, and then target the higher time frame drawn liquidity, whether that's London highs, buy side liquidity, major buy side liquidity, daily, weekly, 4 hour, whatever it is. In this case, it was all-time highs, so it was a very major drawn liquidity. So what I usually wait, right, is for the displacement to happen specifically during the macro. Now, from experience, whenever the displacement happens, so if we see here, we have the SMT, so that's one. The draw is higher, that's two. We have the Judas swing, the fake out, a little bit lower before this, right? We didn't catch the entire move from here. I'm trying to catch it from here, right? So that's three. And then, so SMT, higher time frame draw, Judas swing. Number four is the fair value gap, right? Now, I usually demand that the fair value gap happens during the macro. So usually I want to see this portion from here to here happen during the macro, not before. Now, from experience, whenever this happens, is we get the full kind of package, right, before macro, and then what's left is just the entry. I like to wait for confirmation. I like to wait for this fair value gap. If this fair value gap happens before macro, I look to wait, because from experience, whenever this happens, this fair value gap, a lot of times it gets ran through, even though you have all the confluence. So just to be sure, whenever the fair value gap happens before the macro, which in this case it happened like 10:35 or something, I will wait for that fair value gap. When we tap into it during the macro, I will wait for that fair value gap to be respected to the upside with another fair value gap to then enter, right? So in this case, again, higher time frame draw, lower time frame SMT with a breakup structure right here, all that beautiful, off of a 5 minute fair value gap. We're pushing off that, beautiful, right? The only thing is the entry. The fair value gap here happened before the macro, so now I'm waiting for confirmation in a form of a breakup structure on the lower time frame, again on the 1 minute, with an impulse, and then I'll enter there, right? So I'll wait, and you'll see here, had I not waited, even though this looks like an A plus setup, we have everything that's going good for us, but just that one thing, that fair value gap happened outside of macro. And we know, or hopefully that you guys know, is anything outside of macro is just naturally lower probability, right? Price action is just lower probability. So this fair value gap happened before the macro, so that just makes it a little bit lower probability, and it makes it less favorable in our direction, right? So I just want to make sure that this fair value gap is respected to the same direction that I'm looking to target. You can see here, sell side, London lows swept, clear push to the upside, clear draw higher. We've come down, respected 5 minute fair value gap. It's just beautiful, perfect A plus setup. We're in a 5 minute fair value gap that we've created, amazing, right? SMT as well. But the only thing, again, is that fair value gap happened before the macro. So you'll see here how this fair value gap gets completely ran through, right there. So had I not been patient, this would have been a bad loser, right? So you can see here how we made a completely new low, ran through that fair value gap completely and disrespected it, right? So that's the point that I want to get out here today. Is there's sometimes this is from experience that I've noticed this with time, and obviously from journaling, is that whenever a fair value gap that I'm looking for to enter off of happens before the macro, it's just natural low probability. It doesn't mean that won't be respected. It just, I want to see extra confirmation from this fair value gap just because it happened before macro, right? If I do get that confirmation, we get a breakup to the upside. In this case, I'll take it happily, right? Even if my entry is a little bit higher, no problem. It just now I have more confirmation that this is going to be, this play is going to be, is most likely going to go in my direction, right? Even though everything in this setup looked solid. Look, London major sweep, London low sweep, clear push to the upside, clear draw to the upside, SMT, like everything is perfect. But there's just one thing that from experience I've seen, that if it happens before the macro, it just makes it a little bit lower probability, right? So that's basically going to be it for this video. Quick kind of educational content for you guys. There's other things that I do implement to kind of filter out these fake A+ setups. I may put these in other videos later, but for now, this is going to be it. So I hope you guys found this insightful. Until next time, stay safe and happy trading.